Good morning, Valley of the Sun. Thank you for joining me, your host, Nathan Claiborne of the Phoenix Real Estate Roundup. Today is Tuesday, November 29th. I hope everybody had a really wonderful holiday with their friends and family or alone, if that's what you prefer. Either way, I hope it was great. We're back at work here at the beginning of December almost, finishing out the year strong, hopefully. Inventory today, active listings, 19 on the Arizona Regional Multiple Listing Service, I should add. There are 19,474 active for sale listings in the valley. The interest rates today dipped down to 6.62%. So we're going to get into a little bit of that, but first, I have to pick a nit. And the nit I have to pick is with the national news media, in particular, Axios this time, but just overall, the coverage of the housing market, and I think because we still have leftover trauma from the housing crash that happened 14 years ago now. The press is just looking for disaster. And sometimes, in my opinion, sometimes the press gets in front of their skis and maybe even talks everyone into a disaster. I don't think that's what's going to happen with the housing market, but I'm just going to read you this headline from Axios that just came out yesterday. Collapse, in quotation marks, collapse in home prices is coming, experts say. Okay. Now, use of hyperbolic language like collapsed and crash and those things is really marginal. It's really clickbait, certainly not accurate. But I want to point out that the headline says collapse in home prices is coming, experts say. And then the very last line, it says in bold, bottom line, some decline in home prices is likely in the offing, but it won't be a disaster. So which is it, Axios? Is a collapse coming or it won't be a disaster? You tell me. There's my nit to pick with Axios, and by virtue of the fact that Axios is the most vanilla, sort of middle of the road, frankly mediocre news source, they are just writ large for the rest of the media and how they cover the housing market, like a bunch of disaster journalists, like they're out there standing in a hurricane. But really, year over year, if you bought a house last year at this time, you have made money now. Okay? The top of the market happened in around May of this year, and it has bounced off of that top, but certainly nothing like a collapse in prices has happened. It has gone down in the single digits since that time. But something more interesting, I think, is happening. So that's enough with me picking nits with the national news media. I know I'm not the only one out there. But what I will say, inventory I mentioned is at 19,474 units right now. Inventory has been edging down for a month. I'm going to say that again for everybody. Inventory has been edging down consistently for a month. So when we talk about, prices and market movements, et cetera, there's a few things that obviously affect it. And the number of units available is one of them. And when there's fewer units, that means typically there will be some kind of price support there. Okay? The higher interest rates have pushed the price support down, but the lack of inventory has kept a floor underneath it. Okay? And then in terms of interest rates, like I mentioned today, are 6.62% on the average 30-year fixed-rate mortgage. Well, get this. It has come down also. It has been steadily coming down since it hit a top of 7.32% on November 10th or 11th. It's been coming down ever since then. It retested that top. And now listen, if I was like a day trader and I was just looking at this chart as if it were a stock chart, it looks like what we have is a double top of mortgage interest rates at somewhere around 7.3%. And then a drastic sell-off or drop-off back down to 6.6%. And that happened, like I said, about 3 weeks ago. And it's been bouncing around 6.6% ever since then. But whenever a stock trader sees a double top, he or she knows, they know that market's probably going to turn around and head in the other direction. Same with the double bottom. Not that that's how mortgage rates get traded, but if you're just looking at the chart and playing the technical trader, that's what it looks like. So interest rates, I just don't think are going to pop above 7 again, even if the Fed raises some more. I think that the bond environment has stabilized a little bit, and we're going to sit around 6 and 6.5% for the foreseeable next couple of months. There's my prediction. But the reason I say this, the 10-year Treasury note is trading down, mortgage rates are trending down, inventory is trading down. Well, inventory is trading down because interest rates are trending down. When interest rates are lower, demand goes up. More people are able to purchase a home. It makes more sense for more people to get into the market. So that's what's happening. This inventory situation, it's been interesting to watch because the news media is shouting in our ear saying that the market is going to collapse, et cetera, like I said. But I'm looking at the numbers every day, and I'm like, well, this doesn't look like a collapse. This doesn't look collapsing. So please look a little bit deeper than the headlines. As somebody in this business likes to say, headlines do more to terrify than they do to clarify, and that's absolutely true. And I guess that's why I'm here, to hopefully clarify some of that for you. The housing market remains slower. We're certainly selling fewer houses, just fewer units per month than we were 6 months ago. 6 months ago, though, we were breaking records. So it's still normalizing. There's still nothing to really hyperventilate about, but we just have to know that it's not going to be like the last 2 years. It's just not gonna. So plan accordingly with your own finances. There's my take for the day. I will say the next segment, I keep forgetting to do it each week, and this week I'm going to do it. I'm going to be more consistent with it. It is the Baller House of the Week. The most expensive house sold in the Valley this week was 8867 East Diamond Rim Drive, listed by HomeSmart and sold on the buyer side by Remax Fine Properties. Congratulations to both of those agents. This house was listed for 425 days, and it was sold at $4.1 million even. It's a big property, 8,200 square feet, 8,200 square feet. There are 7 bedrooms and 11 bathrooms. It's up in the Pima Acres subdivision, which is in between Greyhawk and DC Ranch up there, up in North Scottsdale, above the 101, just northeast of the 101 up there. Really beautiful neighborhood, great view of the McDowell Mountains up there. Congratulations to those agents and that buyer on the Baller House of the Week. And I want to thank all of you for joining me right here on the Phoenix Real Estate Roundup. I will be here next Tuesday and every Tuesday after that, or until I take a vacation, which there's nothing in the offing. So keep joining me every Tuesday. You'll get some insights about the Phoenix real estate market and the macro real estate market, and I'll bring you the Baller House of the Week. Thanks again for joining me.